Good afternoon, everyone, and welcome to GovCon Accounting 101, Understanding DCAA, a Guide for Government Contractors. This is our third in our series of GovCon Accounting 101 webinars. With me today, I have Sean Chen from VP Client Services, and I'm your host, Brian Giblin. Quick look at our agenda. We're going to run through very briefly an introduction and then get right into the meat of it with an overview of DCAA. We'll get into the different types of audits and then give you some good clues and some hints, some best practices, methods for staying ahead. We'll dive into some of the facts and myths about DCAA and some of the pitfalls that you should try to avoid. Finally, we'll wrap it up with some of the benefits that you can achieve by following these best practices. Very briefly about Neosystems. At Neosystems, we say, grow ahead. We've got your back office. We were founded in 2000. We've been a Dell Tech partner. We've been an IBM business partner. We have 120 employees, and we have over 450 clients representing 27,500 employees in our secure hosting environment. As I mentioned, we supply strategic back office services. These include CAS and FAR compliant accounting services. We also host Dell Tech software and other software in our environment, so that keeps it secure. We implement systems including Dell Tech, GCS. We implement CostPoint. We can also supply some staff augmentation if you need for some special projects. We do financial planning and analysis, including cost proposals and pricing development. And we can also help you with those DCAA incurred cost submissions. But that's enough about us. We're more interested in learning a little bit about you. So let's bring up a poll question. Our first poll today is just basically, why are you attending today's webinar? Do you have an RFP that you're working on that has a requirement in it for DCAA? Or perhaps you've been contacted for the first time by DCAA and wondering what to do about it. Do you have an upcoming DCAA audit? Or is this more of just general concern, want to make sure you're familiar, get yourself ahead of things, and follow the best practices around being DCAA compliant? So if you would work on filling in the poll. All right, let's take a look at the results. Bring up the results. Wow, majority of you are doing the right thing, just getting ahead of things, just a general concern about DCAA. So that's great. We'd like to see that. People wanting to educate themselves, be smart about DCAA. All right, so now what I'm going to do is I'm going to turn it over to Sean Chen, our VP of Client Services. Sean has over 18 years of experience in financial and accounting, specifically with government contractors. He currently serves as a CFO to many of our clients, keeping them compliant. He's also implemented DCAA compliance systems, helped with incurred cost submissions, an expert in the area of government accounting. Sean?
Thank you, Brian. I know that you all have a busy day ahead of you, and we'll go ahead and dive into the presentation and hopefully get through it as quickly as we can. So what is DCAA? Well, DCAA stands for Defense Contract Audit Agency, and they are the audit agency responsible for carrying out the audit functions for contracts within the Department of Defense. Really, they're the best known and most influential of the various government audit agencies, and they also make their service available to many other government agencies and really coordinate their efforts with DCMA. And DCMA is the Defense Contract Management Agency, so the two really work hand in hand. So the DCAA audit types that we're going to dive into today are the pre-award survey audits, and most of you all know that as the accounting system audit. Generally, those are performed when you're going after an RFP that has a requirement to submit a DCAA-approved accounting system, incurred cost audits, which are essentially like a CPA audit if your company goes through an annual CPA audit, cost estimate and price proposal audits, labor timekeeping audit, and others that are not included in this slide are really kind of uncommon for contractors, but they include billing system audits, provisional rate audits, and CASB disclosure statement audit. And what that is generally when your company gets to a certain size limit as far as revenue, you have to submit a CASB disclosure statement to the government. And what that is that it's a breakdown and description of your internal policies and procedures, your indirect rate structures, how they're allocated, how they're built, your methodology of allocating out direct versus indirect costs. And it's a very extensive document that gets submitted to DCAA, and DCAA actually reviews and approves that particular disclosure statement. And then any type of internal change that you have within the company always needs to be resubmitted back to DCAA for review and approval. The pre-award survey audit is generally a very nice tool to have once it's been completed and once you've been deemed adequate to do or conduct business with the government. So a lot of the RFPs nowadays, especially cost plus or cost reimbursable type contracts, require some sort of approval from a DCAA office to say that you as a company are adequate to do business with the government. If you're a sub on a prime work, sometimes subs can be notified of a pre-award survey audit as well. That might be a requirement for you as a subcontractor. So in these types of audits, they're only requested by the contracting officer or agency you're trying to do business with. You can't actually call DCAA and say, my system's ready, I feel comfortable enough for you all to come over and perform a system audit. It actually has to come by the request of the contracting officer. Again, it's needed prior to the award of cost reimbursable type contracts. And what DCAA generally does is that they review your policies, processes, and procedures in your finance and accounting department and overall internal controls. So typically, they will request initially, before even coming out and performing the audit, they're going to request your policies and procedures. They're going to review them, document certain processes, and then come over to your company and review those policies and procedures to see if you as a company are internally following those processes and procedures. And in the end result, what you want is that DCAA to be able to provide you either a letter or an email. In most cases, it's an email stating that they find your company adequate to do business with the government. And really what that does is that it validates your automated system calculations and allocations. The risks of having a pre-award survey audit done is that if you're not prepared, DCAA will find deficiencies, what they call deficiencies, within your internal accounting structure. And one deficiency usually leads to other ones, which can result in multiple deficient areas within the company. Once a deficiency has been found, it's actually very difficult to pass a system audit because your company is basically on the radar to having holes within policies and procedures. And it's, once you've been deemed inadequate, you've already kind of already have a black eye with the agency or the contracting officer, it can be pretty difficult for you to win cost reimbursable type contracts in the future unless you're able to get the adequate letter. And it could also be an extended period of time before DCAA revisits and performs another system audit. Again, it's all about how you prepare and how you follow your policies and procedures. And as you'll see through the presentation, that's one of the areas that DCAA looks at the most. Next audit that we'll get into is the incurred cost audit. So once you've obtained cost plus fixed fee type work, each year you need to submit your books or your financials to DCAA, and usually it's 6 months after your year end. So if you're on a fiscal year, it's 6 months after, and if you're on a calendar year, it's basically due by June 30th. And the incurred cost submission is what DCAA does is that they perform a thorough audit of the company's financials, the numbers, your rate structures, your invoicing policies, your invoicing versus contractual requirements, and they take a look at the cost that you've incurred. So one of the main reasons why they perform this audit is to ensure that your costs are in line with what you propose. So I'll take fringe, for example. So if you've proposed on an RFP 30% fringe, and you end the year at 20% fringe, when DCAA comes in and does an incurred cost audit on your financials for that particular year, they're going to be able to see the difference between what you actually ended the year at versus what you proposed. And within that particular scenario, they ensure that your company is in compliance and that the business that you're performing to the government is fair and just. So in that particular scenario where you propose 30% fringe and you ended the year at 20% fringe, the main risk that you face is the indirect rates are lower than you targeted. So essentially, you owe the government back that difference. And that's usually a big red flag for DCAA, and you never kind of want to be involved in that type of situation. It happens a lot of times, sometimes, and usually there are reasons as to why that happens, and you can actually work with DCAA on those. But on the surface, it's never a good thing to have that type of scenario. So that's a risk with incurred cost submissions, or obviously having cost plus type work, it's a big risk. On the other hand, if you consistently underbid the government, let's just turn it around the other way. Let's say you actually end the year at 40% fringe, but you're proposing 20% fringe because you know that your other contracts are extremely profitable where you can afford to do that type of scenario. When DCAA looks at your incurred cost audit and your financials, they could theoretically tell you you're really lowballing the government just to win the work. And if that's a consistent trend, they could actually recommend and deem your rates at a certain percentage. So if your trend over the, let's say, a 3 to 5 year span, your fringe is ending the year at 38% and you're consistently proposing 20%, they could say, well, from now on, you're going to be at 38%. So then your rates become essentially non-competitive, and it would be very difficult for you as a company to win more work if DCAA deems what your rates are. So going through the bullets, again, bullet number 3, you have the ability to lose existing contracts if you don't keep your financials in order and you don't monitor your indirect rates on a month-to-month basis. Again, your rates can become non-competitive, and the more issues you have during an incurred cost audit, the more focus you're going to get on a contractor. And from clients that have dealt with this, that's not what you want. You don't want DCAA to focus more on you. And then also it could take years to be back in favor. So it could take years for your actual rates to come back in line with either what DCAA's expectations are or what your proposed rates are. Next type of audit we'll get into are cost estimates and price proposal audits. And keep in mind that there's going to be a questions and answers session after the presentation. So, please feel free to go ahead and type up any questions you have, and I'll address them at the end of the presentation. So typically, these type of audits are performed in large RFP efforts or in efforts that greatly increase your employee count or revenue count. So if you're sitting at 20 employees right now and you're going after an RFP that's going to double the size of your company, you're essentially going to what's quote-unquote forward price out your rates or provide what those provisional rates will look like at the end of the year if you win this particular type of contract. So when performing this exercise, sometimes DCAA will come in and take a look at how you built up a cost rate or what your methodology is in coming up with a price to the government. So again, your rates can greatly vary from the time where you currently exist at 20 employees versus what the company would look like or what your rates would look like if you increase the company to 40 FTEs. Now, there's always a submittal to DCAA, what they call unsanitized version. So the prime never gets an unsanitized version. They don't ever see your actual cost buildup, fringe, overhead, and G&A. Only DCAA does. And in an unsanitized version, it actually breaks out if the purpose was to come up with a bill rate, the bill rate goes to the prime, but then DCAA wants to see how you came up with that particular bill rate. So you're going to send them a basis for allocation, how your fringe pool is made up, same thing with your overhead and G&A as far as the pool and the base portion, expense and base. And that's essentially what's called an unsanitized version. So DCAA reviews that. If everything looks good, then they're going to go ahead and accept it. They're going to let the prime know that, okay, they agree with your cost buildup. If there are problems with it, then that's when you're going to get contacted by DCAA, and they're actually going to ask you questions and provide more supporting documentation. So what are the risks of these type of audits? Well, they're usually very quick. Sometimes a DCAA representative won't even come out to the company. But if the rates don't make any sense when they look at the unsanitized version, it could ultimately result in the loss of that potential contract. So again, submitting a cost buildup or forward pricing rates, you need to ensure that whether you have it on a spreadsheet or it's an automated calculated function within your accounting system, you need to ensure that everything is in line and that all of your account numbers and expenses are in the right bucket, and that all of your base as far as G&A, overhead, and fringe are calculating correctly. So if you have a loss of this potential contract due to the fact that once DCAA reviewed that cost buildup, they didn't think it was appropriate, then there's a ripple effect. It'll affect your teaming partners, subs, and competitors, and they'll also be aware that you weren't able to build up that cost correctly, right? Also, it's added contracted cost to you as a company because it could possibly force you to restructure your indirect rates from how they currently are. And it usually typically adds to higher rates, such as G&A, because maybe accounts aren't in the right bucket, or you don't have direct costs in a G&A base, for instance. And then obviously other submitted RFPs could be impacted as well. So these cost type estimates and proposal pricing, very important in how you deal with that and how you come up with that particular cost rate buildup. Last audit type that we'll get into is the timekeeping audit. These are typically random with no set date. Now, I have seen some DCAA representatives contact a point of contact within a few days to let them know that, hey, I'll be there this week on Friday. But it's never usually a few months out. And really the main purpose of this type of contract, this type of audit, is to review the contractor's timesheet policies and procedures and to ensure that the employees are in compliance with DCAA regulations. So when DCAA comes over, they're going to request a list of all employees, billable and non-billable, and they're going to randomly pick employees off that particular list. And what they'll do is that they'll also ask for a timesheet report that lists basically day by day within that particular time frame that they're asking for. And then they're going to also ask to interview that particular employee behind closed doors. Okay? So if your employees aren't aware of either your timesheet keeping policy and procedure or aren't aware of how they should be charging labor through a particular contract, it actually could set the company up to be in trouble. And I'll give you an example. So I've had a few clients actually state that when they've gone through the timekeeping audit, the employees weren't aware of what to say when DCAA has noticed hours being moved from one contract task to another. So when DCAA asks and reviews a timesheet and they see hours being moved out of one task to another, they're going to ask, why did you do this? You know, and a typical answer would be, well, you know, there wasn't enough funding in this one task, and I was asked to move the labor out of that one task into another. That's a huge red flag for DCAA, because what it implies is that there's no funding, so I can't bill for this one particular task, so I'm moving my hours into a task that has funding, so I'm able to invoice the government for that. Well, there's multiple different reasons as to maybe why that employee moved hours out of a particular task, but they aren't aware, or they weren't aware of exactly what the situation is. They were only simply doing what was told to them. So essentially, a timekeeping audit can really hurt the company if all employees aren't aware of policies and procedures or don't understand as to why they're moving labor out of one category into another. So the more that your employees know and the more that your PMs know will ultimately benefit you in the long run. So again, the risks of the timesheet audit is ultimately you could, very rare, you could have the loss of your existing contract. Obviously, if you have scenarios just like the one I described repeatedly happen, it could essentially, you know, you as a company could lose that particular contract. But what it also could result in is that if that particular contract is up for recompete, then you might lose the ability to recompete for that particular contract because of these audits that you've gone through that have maybe negatively impacted your review. Again, it could impact direct billing authorization, where if they see enough of those labor corrections being performed on a regular basis, you could theoretically have to go back through the whole life of the contract to readjust billing, which would delay cost in any recovery in AR in future billings, but also create more costs for you because you have to actually go back and fix those particular invoices. And ultimately, if they find out that the cost movement between one task to another is not justifiable, then essentially they've uncovered fraud or falsifying of cost to the government, which is a huge deal, and also the mismanagement of contracts. So in summary of all the audits we've gone through, identifying the risks, the negative impacts that would have on a company, these are the general areas of interest for all DCAA audits. So they want to see all activities related to proposed or incurred costs. So really having the supporting documentation for your cost estimates, for your rate structures, and how you allocate and incur costs and identify between direct versus indirect. That's all valuable information that you internally need to have, but at the same time be able to provide that information to DCAA. Again, the indirect rate structures, they want to see pool and base clearly identified for all of your pools, whether you just have 3, whether you have 1, or whether you have 7 different different indirect rate pools. They want to see what the structure is and how it's mapped to your current chart of accounts and how it's mapped to identify whether it's indirect versus direct. They want to also see intact contract and invoicing files where the contract files include the original award, any type of modifications that the contract has, any type of correspondence, contract briefs, and invoicing copies within that particular contract folder. If you have provisional rates or if you're getting ready to submit provisional rates, they want to be able to see the budget on how you came up with the provisional rates and the basis and reasonableness of those proposed rates. Most importantly, again, it's financial policies, procedures, and internal controls. I can't stress this enough on how you need to have these items in place for it when you choose, or if you are doing work with the government, to have these in place and to have your employees also follow the internal controls, follow the policies and procedures, and doing random checks to ensure that everything is being followed through, because this is the basis of what DCAA looks at. They first take all of your policies and procedures and internal controls, review them, and then test those internal controls through audits, such as a timesheet keeping audit, incurred cost audit, and the system audit. And generally, they want to also see for you to be able to provide to the government an opportunity to reduce or avoid costs, such as unallowable costs. And that's why most of the chart of accounts within a government contractor have unallowable accounts. So tips on staying ahead of DCAA when in fact you are being contacted for a specific audit is request a list of items to prepare. So you can contact your DCAA representative and ask them for a list of items that they're going to be looking at, that they're going to be reviewing, so that when they come over, you'll have all that information ready for them to take a look at. Because the last thing you want is DCAA to spend extended periods of time at your company just digging through your books. Request an estimated time frame of how long the audit will take or the visit will take. Again, know your basis of support. What that means is, again, going through indirect rate structures, policy and procedures, how you come up with invoicing amounts, how your system is set up to follow contractual requirements. Just know the ins and outs of your company from a financial perspective, and then document your audit log. So if you are in the middle of a DCAA audit, document what's going on, what type of questions that they're asking, what type of items that they're focusing on, because that'll be valuable information for any audit going forward, because at the same time, DCAA is going to create their own audit log. Know your contract terms and conditions, and ensure that you have the proper people in place in your company to follow through on contractual requirements. Again, the ability to provide supporting schedules and other documentation in detail, and always request a copy of the audit report, whether it's negative or positive. So we'll get into DCAA Fax now. So DCAA can recommend or even implement reduction or increase of your rates. Okay, so again, we'll just go back to the fringe scenario. If you propose 30% fringe and you end the year at 20% fringe, well, DCAA can reduce or increase your rate depending on which way that goes. They have the authority to force sanctions on you as a contractor. I'm not going to go into what type of sanctions, but they are out there. And this is really the biggest fact in our current environment, is that DCAA has a lot of turnover, whereas many years ago they really didn't have that. And you know, a while ago, I'd say maybe 10 years ago or so, a lot of times the auditors would have a lot of experience. Some of them are now senior auditors who aren't really in the field, but they wouldn't be so much by the book. And what I mean by that is that if they uncovered a deficiency, for instance, you could kind of negotiate with them to a point where maybe they won't put it on an audit report because of you have some type of justification as to why that deficiency exists. So now that the workforce, and especially the field auditors, are inexperienced, they follow the book. And an example is that a client of ours just went through a system audit, and there was one account that was incorrectly placed in a bucket, just one account. So 99% of the field work and the audit for the system review had been done and deemed adequate. But just because of that one particular account, the DCAA auditors actually failed the company to do business with the government. So they, along with us, went to the supervisor and made a case saying, look, we passed essentially everything else that you all were looking at. This is the reason why we had one account in another field when it shouldn't have been. So the company corrected that deficiency. They actually came back out the following week or 2 weeks, reviewed that deficiency, noted the correction, and actually passed the company for a system review. But the point is that since the auditors are inexperienced and following the book, there's really no gray area that they can choose from, nor do they have the ability to make that type of decision saying, okay, yes, you're right, that's very minor, I'll let it pass, I won't put it on the audit report. So that's really the one big concern is that these government contractors are facing nowadays when they're dealing with DCAA audits. So a lot of the myths, and there's just really 3 of them that I really wanted to post up here, is that DCAA actually approves accounting software. They never approve the actual software itself. They approve the internal processes and procedures and how the costs are incurred, how they're allocated out, and how you ultimately end up billing the government. That's what they approve. They will never assist you in developing rates and rate structures. So if you were to call them and say, well, I have this scenario, and I'm thinking about splitting out my overheads, for instance, they'll never tell you whether it's right or wrong, and they won't tell you if you should do it or if you shouldn't do it. And again, they don't provide advice on really anything. So some pitfalls that most small to mid-sized government contractors face are the financial capability to handle DCAA compliance and contractual compliance, good policies and procedures, understanding contractual provisions, internal control management policies. They're both one and the same. You might have policies and procedures as far as from a finance and accounting perspective, but you might not have those internal control policies from a management perspective. Another pitfall that a lot of government contractors face is the inability to clearly distinguish between direct and indirect costs and how those costs are allocated into one of those buckets. And lastly is the inability to provide supporting documentation for your costs and direct and indirect, as well as cost buildup and pricing. So the benefits of, let's say, being on the good side of DCAA is that you could have approved provisional rates each year. So provisional rates are, again, is a forward pricing method that you think the company will end up at X amount of dollars from a labor perspective or an indirect rate perspective at the end of each year. So in thinking that, you send these rates to DCAA for them to approve. Now, the advantage of having that is that it gives you the ability to be ultimately competitive year in and year out, because you're relying on being awarded contracts, and once awarded contracts, those billable employees, if you're a service-based company, adds to your base. And the more costs that you can add to your base without increasing your pool or your indirect expenses forces your rates to come down. The lower your rates, obviously, the more competitive you are. And having low rates in today's market is really the key in winning a lot of work. So again, if you were able to be deemed adequate to bill the government, or through a system review, you can be awarded all types of contracts, not only just on a T&M and fixed price basis, but now you can go after cost plus work because you have the ability to do so through DCAA. Having an adequate system also gives you a major advantage when bidding, because some of the RFPs have a provision in there that you need to have a DCAA approved quote-unquote system, and you know that your financials are in order. So once your financials are in order, you're able to make better sound financial decisions within the company, and it also gives you the ability to monitor your costs, rates, and that type of thing. So with all that said and done, the ultimate goal, right, is to price, is to be able to have pricing capabilities so that the data that you are relying on is accurate, and you know that through your policies and procedures, through your internal controls, and through your accounting system, whether it's through an automated type feature or through an Excel type feature, you're able to rely on the data if you're able to kind of follow through policies and procedures, cost allocations, you're following contractual requirements, you're able to rely on this data to, one, build up a rate, to compare profitability for an employee, and 3, ultimately be able to price correctly. So in this example here, once you've gathered that data and you know that the data that you have is correct, then you're able to build up, on this example, it's a salary of $100,000. So the raw hourly rate is $48.08 an hour. So how you determine your wrap rate or your cost buildup, and this is pretty much how DCA is going to look at it. They're going to look at, okay, the total cost of this employee is $85, but how did this company get the fringe rate? How did this company get the overhead and G&A rate? And that's the basis of support that they're asking for. Okay, well, out of all the accounts, all right, all these accounts supposed to be fringe, or all these accounts supposed to be overhead? Are any intermingled or any double counted? This is exactly what they look for. And if you're able to pass that level, then you're able to do this exercise for every RFP, for every project profitability exercise that you go through, and for every cost buildup. So how you build up a rate is that you take the raw labor times the fringe rate. In this case, I use 32%, so that adds an extra $15.39. Then you factor in the overhead. So it's taking the raw labor plus the fringe dollars amount and multiplying it by the overhead rate of 24%. That gives you another $15.23 for overhead cost. Then the final piece for a burden rate is, or a loaded rate, is adding G&A on top of that. So you combine the sum of the raw labor, fringe, and overhead, and you multiply that by the G&A rate. So now it gives you a total cost to the employee of $85. So that's how much the employee actually costs the company. Okay? So if you want to obviously add in fee, then you take in that $85 and you build in a fee. In this case, it's 10%. So that's the profit you're going to make off of this employee, and it gives you a total bill rate of $93.48. So one way to figure out quickly how much an employee costs a company is you can essentially come up with what's called a wrap rate, and in this case it's 1.76, and that's pretty competitive. It's not the best and it's not the worst, but you're able to figure out if you want to quickly price out a salary employee, and if you want to put them on a, I don't know, let's say an existing labor category that you have within a company, you can automatically price that out by just multiplying the wrap rate versus against their salary or their hourly rate. And this is really the end result of why you go through DCAA audits, why you prepare your company from an internal perspective so that you can perform these type of exercises with ease and not have to worry about, is the data correct, is the data not correct. So with that, I'll go ahead and turn it back over to Brian for our second poll. And
yeah, really fascinating as you take us through that rate buildup. That is what it's all about, and taking us through the indirect rates, calculating those pools, the pitfalls, and the benefits, so that, yeah, we can rely on the data and build up those rates so it can price correctly and win those profitable projects. Opening up our next poll, want to learn a little bit more about you. What system are you relying on as you go through and calculate those rates? Are you on QuickBooks today? Are you using Peachtree? Are you using one of the Deltek systems, GCS and CostPoint? Or if there's another system that you're using. If you're using another system, please write in the question box what system you're using. That would be very helpful. But these are the just want to get a sense of what systems people are using out there as they're working on being DCAA compliant. All right, I think we're going to close out the poll. And let's share those results. Thanks. And terrific. 80% of you are on a Deltek system. Deltek does make a great investment in creating systems, as Sean pointed out, not systems that are approved by DCAA, but systems that have a long history of being properly configured so that the contractor is approved as DCAA compliant. And 20% of you are on other systems. Be curious to learn what those are. Please feel free to write those into the question block as you go through. And at this point, I'll remind you also that feel free to open it up. If you're going to have questions, please type them into the question box. And with that, I'm going to turn it back to Sean. Oh, okay. Well, I'll start filling in questions as you have them. Other resources you have available to you are SBA, if you have questions. DCAA.mil is another resource for you. If you have questions about the FAR, good links for that. FBO, Federal Biz Ops, another great resource for you. And the GovStore. We also have some resources at Neosystems that are available to you. We have classes that are available. Today's webinar is free, but we also have online classes that we do charge for, very reasonable rates. We also have the Cost Point blog, which variety of comments. We open up and explore different issues and provide advice on the Cost Point blog. And as always, if you have questions, feel free to email us at growahead@neosystemscorp.com. Okay, we're going to open it up to questions now. And one of the typical questions we always get is but one question we always get is will the recording of the webinar be available? And I do want to share that with you. Yes, we will. We are recording today's webinar, and that recording will be available in a few days.
Okay, so I'll get into some of the questions. One of the questions are, when are provisional rates due to be submitted to DCAA? So that's a good question. Typically, they have a hard date of December 9th if you're on calendar year. Depending on the office that you deal with, if you have a DCAA contact, generally you can reach out to them and ask that particular question, and they'll be able to provide that. So then the second question is, how do we obtain a copy of your presentation? They are available on our website, and we'll be able to provide a link to you all for this presentation if you all desire. So you can just either email myself or Brian, and we'll be able to give that for you. And the last question we have is, do we have to calculate a provisional rate with the assumption of the award? You don't. You can actually base a provisional rate on cost cutting, for instance. If you know that the company is going to take a less aggressive approach of going after contracts, you can provide a provisional rate that'll show what your company will look like. So in the end, it doesn't have to be with an assumption of award. It can also be with the assumed cost-cutting type functions as well. Okay, so with that, I'll go ahead and turn it back over to Brian for final conclusion of the presentation. And again, I want to thank you all for joining us.
Thank you, Sean, and thank everyone for joining us today. And as always, if you have any questions for us, feel free to email us. Our email addresses are on the screen, schen@neosystemscorp.com and bgiblin@neosystemscorp.com. Again, thank you for joining us today.